it's your boy. I go by the name of Ofentse Ledwaba. Guys, it's been a great week, and I'm here today to share the most important thing in your forex trade: the importance of the market structure. As you know, guys, I don't use any indicators. I don't use any robots. I don't use any type of system. I use pure price action, and that has enabled me to be consistent and be a profitable trader, and also be able to manage my psychology and be able to understand what really happens in the forex industry, and understand the motives and also the challenges that I've managed to overcome. With that being said, guys, all I'd like to say is that, guys, you need to have a mindset of being to a destination even before you reach there. So always believe in yourself that you are a successful trader. The minute you start today, the minute you know that you want to enroll into a line of business, tell yourself you will be successful, and definitely will successful. You'll be successful. You won't fail yourself. It will always be within you. The passion will drive you. So basically, guys, join me into the chart as I break it down the market. This is the only forex education you've been looking for. Good. Welcome, guys, to the charts, and let's just go and see what GBP has got in store for us, guys. I'll be just showing you the importance of the market structure and why I don't use all those indicators out there. Basically, I just break down the market to how I trade, and also you guys can be able to understand the minute you see a chart pattern, the minute you see an entry, how do you capitalize on that, and how do you often see your reversal kind of structure. So basically, just need to understand the level of clarity that you will get from the market, and the minute you start analyzing, you basically come with practice, you'll be able to spot those type of patterns with ease. You understand? So actually you need to train your eye, be able to spot those type of patterns. So we're just gonna start on a daily, and I'll show you how we're able to spot those market structure patterns. So always remember that the minimum that a peak must touch is a minimum of 2 peaks. You understand? If it's more than 2, the better. You understand? So basically, you can see now, I can see we already have a structure here drawn out on daily. You understand? So I have my outer structure is this one, because you can see that we have 1, 2, and then on top we have 1, 2. So basically, subsequent to that, I'm expecting this to give us a third touch around here at the top. You understand? But we cannot just justify that yet. We need to break down the market and then see what we are having in a smaller time frame. Yes, with a higher time frame, we expect the market to come here. Understand? Give us the touch here. Understand? So subsequent to that, we can at most have a touch here before we shoot to the upside. You understand? So basically, we don't have that scenario yet, but this is just what we can expect to happen. Understand? Either one of these two. So let's just see what we have on 4-hour time frame. I'm gonna make this analysis as simple as possible so that you guys can be able to understand. Always make sure you're taking notes, or you can also subscribe to catch much more content about the market price action, the Forex Heroes 2.0. We're now looking at the 4-hour time frame. With the 4-hour time frame, you must understand that in a day, as opposed to a daily candles, in a day we have 6 candles. So you just need to understand that out of those 6 candles, 1 candle is 4 hour long. You understand? So basically, it just shows you that you need to understand which time frame you are at, that enables you to be able to understand the market structure, and also the confirmation that you will get, and also the confirmations that you get from higher time frame. You basically use those moves on a smaller time frame, because you have to understand that the bigger moves eventually symbolizes what happens on smaller time frame. Yes, the market starts from smaller time frames, but you must just understand that the minute you have your structure outlined, you would see where the market starts. You understand? We are now on 4-hour time frame. So on a 4-hour time frame, I can see that we are in the middle here, and we have an impulsive move coming from the bottom. You have something like that. So basically, this looks like a correction of some sort. You understand? So I would say this is a correction. This will be a correction. So basically, we just need to understand where we are looking at the market to go. Understand? This type of correction, how is it? Understand? As you can see here, we did have a correction to the downside, and the market pushed up, but then it came and broke this low, created a new low. You understand? So this low is lower than this one. So in short, we can just say it was supposed to form a low above this one, then continue to the upside. Hence it broke this one, tested this one, and then what did it do? It went to the upside. So you can see that here we are having some sort of a triple bottom. Understand? You're having 1, 2, 3, third touch. You understand? So basically, what I'm expecting to happen, let's see. What I'm expecting to happen currently, because you can see here we are having a correction of some sort, but you have to understand what type of correction it is. But I see we are in the middle of nowhere. So you understand? We are in the middle here. You understand? And we are having these levels here as significant areas, and we have this one is significant here. So you can see we are between these two price levels. You understand? So a break between these two will certainly push to the upside if it breaks up, and then a break to this one will basically come back to the downside. So let's see what we are currently having, because you need to understand that the minute you see a market structure, you need to know whether you are long or you are short. And also don't forget to understand the phase that you're in. Are you in an impulsive phase or you're in a corrective phase? Because many people tend to place their trades in a corrective phase. The market tends to correct with them. So basically, you need to understand the bigger moves will be in impulsive moves. You understand? Yes, you can take those corrective moves, but you need to be extra cautious, because you need to know that sometimes you can never know how long will a correction last. You understand? Because with the impulsive move, you find that the market moves very quickly, and then you are able to capitalize on those moves, and then you encountering losses will at most be less than you trading in a corrective phase. Because you must have a corrective phase, that's when you predict or wait for that break. You understand? Like where you're seeing your reversal structures, or when you are seeing the continuation. But when you know that the market is continuing in that perspective, you know that the market will basically correct for 8 hours or less. You understand? So in most cases, you find that 1 hour candles, 8 of them, or you find that you are looking at 15-minute candles, 10 of them. You understand? So basically what I'm looking at currently, I can see we have a significant area around here. Hence, I see we have a chance of going down, because you can see what is currently having. We are having some sort of a correction, because I can see this point 1, 2, 3, but we are not impulsing up. You understand? We are basically going in a corrective manner to the upside. So this is just what we can expect around this level. So this line can represent this. Some looking like a pattern within a pattern. You understand? And it's going to the upside. So I would say currently we are looking at this move. Understand? As I told you that we have a chance of coming down first, before we can shoot to the upside. So this is just the method or the secret of understanding the market structure. The market structure moves with the market. You have to understand the level of trading that you will not just master this if you don't practice, but you need to understand overall here. I see this as a bigger correction on a higher time frame. So basically, hence I say we can move to the downside, reach our 90% rule, the TP here, and then after here, that's when I will see, because all of this I see it as a correction. You understand? I see this as a bigger correction, but it's possible that it can break it and then the market tends to correct, then break it further down. You understand? So that's when we'll be taking our sells because of what is currently happening. First TP be here, and then if it continues, you take your other entry around here. So basically, this is just what we'll be looking at on GBP/JPY. I hope this was very much productive and you guys managed to understand the importance of the market structure. And also what I'm trying to tell you is that the market structure, guys, repeat itself. You understand? Just do a quick back test. You can see here we are having a correction to the upside, then a break to the downside, just like what is currently happening. And then you can see we had a continuation pattern here. Understand? So basically your first sell would have been here, taking a risk entry around here, and then another reduced risk entry at the break of the structure, sell again, and then a sell on the continuation. Then when it came down, you have to understand and take into account how is the market going down. You understand? Here you can see we are correcting to the downside, hence we broke and then retest, correct, shot up again. So you can see here we knew that we need to take our buy positions because we are now correcting to the downside, and we reached our TP here. First TP, and then the second TP, you will have till stop your stop loss. So see another one. You can see here we have a nice looking like a head and shoulders. If you take this left shoulder and then the head will be this one, and then nice head, looking head and shoulders, and you know that level this would have been a way of you taking this trade. You know that the break, retest, and then you take your buys. So all this market structure, guys, they are visible. Also, we are having a structure here. So all you need to do is turn your eye, guys. You can see we are correcting, break, sell. You have a double top here. 1, 2. Took your buy here. So always, guys, learn to practice and understand these moves that are happening, because all of this repeats itself.
And sometimes don't force your lines. If you see that as long as you can see a significant chart pattern, you can see here we had a fake out here. It's a fake out in it because it came back inside the structure and then it broke. When it broke now, it never came back. Understand? So learn to understand the fundamentals of price action, guys. Thank you for tuning in. Please, guys, do not forget to like and subscribe, guys. Let's make this channel a most educational channel about forex trading. Let's keep on pushing, guys. Believe in you. I believe you're a winner. Please do not forget to click the notification bell so that you can be notified every time I post new content. Thank you for the support, guys. Thank you for tuning in. It's your boy, Ofentse Ledwaba.